Can private equity make your retirement fund a powerhouse? Imagine turning your retirement savings into a strong financial engine that keeps growing over time. That's what private equity can potentially do for your retirement fund. Private equity involves investing directly in private companies or buying out public companies to improve and grow them before selling. These investments are made through private equity funds, which gather money from investors like pension funds and high-net-worth individuals. Private equity has shown it can deliver higher long-term returns than traditional public stocks. Over the past 10 years, private equity investments have often returned around 11 to 13% annually. That's higher than many stock market benchmarks. The secret lies in investing in private companies that are not traded on public markets. Managers actively work to improve these companies by restructuring, streamlining operations, and helping them grow before selling or taking them public again. But it's not just about higher returns. Private equity can help diversify your portfolio because its returns are less connected to public market swings. This can make your overall retirement savings less risky and more stable over time. Still, private equity is not for everyone. It usually requires a long-term commitment of 10 to 12 years because your money is locked in. Early years can sometimes show negative returns due to what's called the J-curve effect, where initial losses are common before gains appear. For African American investors, access to private equity has historically been limited by high minimum investments and fewer opportunities in fund management. However, more retirement plans and pooled investment options are opening doors to help bridge this gap. Private equity is best suited for those with a long view, aiming to grow wealth over decades. It often charges higher fees than traditional investments, which can eat into your gains if you're not careful. Building wealth through private equity can be especially powerful for African American families looking to create generational wealth. It offers exposure to growth sectors and companies that might not be available through public markets. But it's important to understand the risks. Because these investments are less liquid, you can't easily withdraw your money before the fund's term ends. Fees and fund manager skill also influence performance, and not every private equity fund outperforms the stock market. Some critics argue that the higher costs don't always justify the returns. Lately, many large pension funds have increased their private equity holdings, showing confidence in its growth potential. This trend suggests private equity is becoming a more common part of retirement portfolios, even for diverse populations. In the end, private equity can turn your retirement savings into a powerhouse if you approach it with patience, careful research, and awareness of the costs and risks involved. For African American investors, expanding access and understanding private equity can be a key step towards stronger retirement wealth.